The South African Reserve Bank hiked interest rates 9 times since the beginning of 2022, and this can impact REITs as there's an inverse relationship between the two. When interest rates go up, REITs go down. REITs have been down by 8.8% in the past year. Hello guys, how is it going? It's Larato Mchagi and welcome back to my YouTube channel. As you can see by the title of this video, I will be investing in REITs, and I believe I did mention in my first video that I'll be documenting my investment journey. So stay tuned to see what I invest in and make sure to subscribe. So REITs are real estate investment trust. So when you invest in REITs, you are basically investing in a company that is investing in property. So right now REITs are not doing so good because of the hike in interest rates, but anyway, we buy them because buying on red makes you money while buying on green makes you feel safe. And personally, I don't want to feel safe. I want money, so I'm gonna continue buying even though they are not really doing well, because honestly in the next 5 to 10 years it is going to pay off. Right now the housing market is facing affordability issues due to high interest rates, and that is causing a poor performance in REITs. Demand in property is declining, and this is due to people's fearfulness when it comes to investing in property. And honestly, people's emotions are driving the market, and this was evident during the COVID time where people thought the world was ending, they were pulling their investments off, and some were not so confident in investing. And the same thing is happening now, because why would you buy property or sell property when the interest rates are this high? So REITs are really performing poor right now, and it's because of that. So right now REITs are very much discounted, they're very much cheap. So this is the best time to buy REITs because, like I've said, they are cheap. So when now the Reserve Bank is going to reduce the interest rates, the share prices are going to pick up, they're going to increase, and then you're going to realize your gains. So if I were you right now, I would honestly buy REITs. And on the other hand, they pay out dividends. It's a requirement that they must pay out dividends, so you might just need to think twice about them and invest in them if you are not already. I don't have a lot of REITs in my portfolio. I only have 3, but because I love REITs and they've got great features, so as time goes, I will be adding more. And REITs are a great alternative to buying property. If right now you don't have the means to take out that huge amount of money to buy property, you can buy REITs. And as I've mentioned, they are cheap and they pay out dividends. So it's actually a requirement that they need to pay out 70% of their income to investors. And a lot of people buy property because they say that, okay, they want to have this monthly income that comes in. And honestly, you can do the same with REITs. There are a lot of REITs and they pay out dividends in different months. So you can structure your portfolio to make sure that every single month they pay you dividends. For example, if you have Growth Point, if you have Redefine, if you have Storage, and then you find that Growth Point pays out in January and December, the one is paying out in February and October, and the other is paying out in March and September. So you can structure your portfolio to make sure that every single month you are getting an income, which is the same as getting rent income when you renting out your property. And honestly, there are people who believe that they must invest when the shares are doing good, when they're on green. And honestly, as much as that might feel safe, it is very much advisable that when the market is down like it is right now, not entirely though, but you get my point, it's not really performing well. So it is now that you can invest more of your money, like you go in hard right now, because in the coming 10 years, it is going to pay off. So actually, it would be very wise to invest right now when the market is not performing very well, because you know that when the stock market is down, then the only next step is for it to go up. Unlike when you are now buying, when it's all good, it's all on green, then it's gonna go down, or it's just gonna continue going up. But in this case, talking about REITs, you know that if now we wake up tomorrow and Reserve Bank is like, we are not going to be at 9% of repo rate or whatever, then you are going to lose out, right? But then it cannot always be the case that the interest rates are this high. The very same thing happened, I think around 2008, but eventually the economy picked up and property started doing well. So the very same thing is going to happen. We just not so sure when, but it is supposed to happen. So if now the share prices are down, they're going to be up, and then you are now going to make profit or great returns on your investments. Now let's go ahead and head into Easy Equities and invest in these companies. So right now I'm inside my Easy Equities account. Don't mind me when I'm not looking at the screen, because I'm looking into my Easy Equities account on my phone. So the first investment that I'm going to make is in Emira Property Fund. So this is a REIT that has a diversified portfolio. They invest in industrial property, residential property, commercial, offices, malls. So they've got a great portfolio. So now the average purchase price for Emira Property Fund is 10 rands. That is quite affordable. So now, as you can see, a year ago, remember that I did mention at the beginning of my video that the performance of REIT have went down by 8.8%. So this property fund has went down by 6.13% since last year, which is not so bad. I mean, given the state of our economy, everything is just so bad, everything is expensive, so it's not doing so bad. So I'm gonna go ahead and buy. So right now the market is closed, so meaning that when I buy right now, it's only going to go through on Monday when the market opens. It opens at 9 a.m. and close at 5. So I'm gonna go ahead and click more, buy more, and I'm gonna invest 50 rands. I did mention in my first video, please be sure to check it out, that I do not invest much into individual companies. I invest more into ETFs. So in my Easy Equities ZAR account, I'm only putting in 200, and then the remaining is going to go into my ETFs. So I'm going to buy 50 rands worth of shares, which gives me 4 shares in Emira. And honestly, this company just paid out dividends, I think on the 13th of March, and I received 5 rands dividends. That is so nice. I mean, somewhere. So that is great. It pays out dividends. So it pays out dividend in March and September. So from here, I will be receiving dividends again in September. Now the next company that I'm going to put money in is Storage Property REIT Limited. So this one leases out space where if you want to keep your property, maybe when you're away or you don't have a place to stay anymore, then they're going to keep your assets or your furniture, whatever, and then you're going to pay them. So that is their business. So I actually love storage so much because it's actually growing. It has been growing, even though they have a decline in their annualized growth in the last 5 years, but they have been consistent in paying out dividends. Even now, they have declared dividends, which it's going to be paid out in June. So if you want to receive dividends, you can look to invest in storage. So now, going back to Easy Equities, in the last year, it has went down by 12.59%, which is expected because right now property is not doing well. So I'm gonna go ahead and buy 50 rands worth of shares. So I'm gonna go to buy more. And buy 50 rands worth of shares, which is giving me 3.8 shares, as you can see there. And I think I've mentioned just now that because the market is closed, it's going to buy at open. So this is going to go through on Monday when the market opens. So the last REIT that I have in my portfolio that I'm going to invest in is Dividend Income Fund. So this one is the same as Emira Property Fund. They have a diversified portfolio of retail, office, industrial, and residential rental assets throughout South Africa. And I know I said storage is my favorite. Actually, all these REITs are my favorite, but this one specifically has a positive annualized growth in the last 5 years of 62.28%, meaning that their dividends have grown in the last 5 years. Not only were they consistent, but they have been increasing their dividends, and they pay out dividends in December and June, so that is twice a year, which is so great. So now back to is equities. Even in this one, I'm going to put in 50 rands. Yeah, so in the past year, to look at its performance, it's at a loss of 3.61%, which is the worst best compared to the other two. So this is not entirely a bad performing REIT given the conditions of the economy when it comes to property investment. So I'm gonna keep on investing in these companies regardless of whether the share prices are high or low, because my investing strategy is that I want to invest for dividends, right? Not only for growth, but dividends. My focus on dividends. So even if a company is not doing so well because of economical conditions, I am still going to continue to buy in it because my goal is to receive dividends. As long as I'm still confident that this company is going to be here in the long run, so I will continue investing in it. So let's go ahead and put in 50 rands in this one. So putting 50 rands into the Pula Income Fund gets me 11 shares. So that says a lot that these shares are so cheap. So I guess if maybe you doubted what I said, you can now see it that actually REITs are very much cheap and they have attractive returns. So like I've mentioned, you might just consider investing in REITs. So it's the end of this video. Thank you so much for tuning in, and don't be so discouraged when you see the market being on red. You know what I said, and I said what I said, that now is the best time to buy. So keep well, and thank you for watching. Once again, don't forget to like, comment, and subscribe. See you in my next video. Bye.